Welcome to Stranger Encounters. I'm Tommy Salmons. Today's guest is a co-founder and president of Crypto Market 360. He's a seasoned serial entrepreneur and veteran of the United States Navy submarine force. He spent 8 years building an information curation company that served Congress and Fortune 500 companies. He became aware of Bitcoin in 2011 and immediately knew this was the future. Paul McNeal. Hey, Paul.
Hey, how's it going, Thomas?
It's going good, man. It's going good. How are you doing?
Awesome. Doing good. Keeping busy in this wonderful world of crypto.
Yeah, well, I'm gonna let you tell us all about that. What is cryptocurrency for those that have no idea exactly what it is?
Yeah, cryptocurrency is it's basically a digital asset. It's a new digital asset. A lot of people try to put a lot of different terms around it, but it's actually a little different. But it's just like, believe it or not, swiping a credit card or using PayPal, those types of things. It's money that you just physically can't see. And so that's an easy way of explaining. Now, there are huge differences between how money works with credit cards and PayPal versus Bitcoin, but that's, easy way of saying it.
Yeah, one of those differences, it seems to me, is crypto is more designed to be like a digital cash, to where it's exchanging hands from one user to the other user without a middleman. Is that a fair assessment?
That is a fair assessment, and I'm glad you actually said that because you're right. Here's the thing. When we use credit cards and we use PayPal, it's really not operating as cash. So if me and you were standing together in some event and you say, hey, Paul, give me $5. I say, sure, I can give you $5. You can take that $5 and you can leave. I can never, ever get that $5 back. With credit cards and with PayPal, we all know that you can easily call up PayPal or call up the credit card company and say, hey, I didn't want whatever, and they will give you your money back. That's not the way crypto works. Crypto works exactly like you said. It's digital cash.
Yeah, and everybody's run into that problem with banking or credit cards, to where something was double charged on their account, and it took them 10 seconds to take the money from their account, but it takes them 30 days to put the money back in, and things like that. How does crypto protect people from false charges?
Well, that's the thing. So, and I use it sort of in computer terms. You have a PC, and I don't know, maybe too much technical detail, but the way DOS works is every time you do something, it asks you, are you sure? And crypto works like Linux. With Linux, you put in a command, you hit enter. The computer doesn't ask you any questions. It does exactly what you said. And so that's the way this looks. So when you talk about false charges, false transactions, everything that happens on the blockchain, once you do it, you've done it. There are no ways to pull it back. And this is why it's very important. Anyone who's planning to participate, you need to really understand what you're doing, because there are no do-overs with cryptocurrency. If someone was to acquire your address and they get a hold of your cryptocurrency, it is now their cryptocurrency. So it's something to be very careful with when you get into it, but it does provide you freedom from the system that we currently have, because you are in control of your wealth. You are in control of your life. No one else is in control.
Right. It protects you against inflation as well, does it not?
That is true. And the reason is, and now this is where we get into the fun part. So the way Bitcoin was created, there is a fictitious name, Satoshi Nakamoto. It is my honest belief there's no such person ever. This technology has been worked on for decades upon decades upon decades. This is not new. What happened is, I think a group of people figured out the answer, and they decided, because this is so powerful and it has such the capability to completely disrupt everything, that they don't want anybody's name attached to it. So they created this name, Satoshi Nakamoto. So Bitcoin is basically math. And what they found is they solved what's called the Byzantine generals problem. If you wanted to attack a city and you were a general and you wanted to corner it on all sides, you need people bringing back the proper information, and you need people relaying the proper information so that when the attack goes down, it goes down the way it's supposed to. But what happens if you have some generals who who are a little bit, maybe spies, or they may be working for the other side. The best thing for them to do is come back and tell the main guy, hey, we need to attack at 8 instead of 9. But they tell everybody else, hey, you're going to attack at 10. And all of a sudden, one side goes to attack and they get slaughtered as a result. So the Byzantine general problem was, how do I get the right information out to everybody, and how can I make sure that everybody got the proper information and everybody's on the same page? Cryptocurrency allows us to do that. It's the first decentralized, censorship-resistant technology that's ever existed. Now, let's break that down. Ledgers is how this thing works. If I go to a bank and I want to borrow $100, the bank will record it in a ledger and say, Paul owes us $100, and we're giving him $100. The trust is with that bank. What if the bank decides, oh, Paul owes us $1,000. He borrowed $1,000 from us. It says it right here on the ledger, you borrowed $1,000. I go, wait a minute, I only borrowed $100. But they say, hey, you borrowed $1,000. So all of a sudden you have a conflict. You need consensus. So what happens, think of this as Google spreadsheets. We used to have Excel. I would have a sheet. I can make changes. Then I have to email it to you. You get it. You open it. You make changes. You send it back to me. Google said, why don't we give everybody the exact same spreadsheet, and we can see in real time as people make changes. The Bitcoin network allows, it's called the gossip protocol. If me and you are together and I say, hey, I'm going to give you $5, we then tell everybody we know that Paul gave Thomas $5. This way, no one can lie. And if someone does decide to lie and the network finds out about it, we penalize that person and say, hey, guess what? You've got to be quiet for the next 24 hours. And if you do it again, you're going to get kicked out permanently and you never can join the conversation again. So with a decentralized network that's like that, that makes it really good. But what makes it even more powerful, and this is where the term blockchain comes in, is all of the nodes will take those transactions, and once they've got those transactions, they put them into a pool, and now you have what's called miners, people who will run a program that solves problems to compile those transactions into blocks. Now, once your transactions have been put into a block, every 10 minutes, the block gets sealed off and it's permanently recorded in history forever. No one can ever change that information. Now, with that block, each successive block is linked to the first block with a piece of code from the first block. And if you can imagine, like puzzle pieces, one links into the other, you can't make a change to that forever. And it's very highly secure. So now you have a highly secure network where you can do finance, you can record identification, you can record titling, you can take anything in the physical world and bring it into the digital world for the very first time.
Yeah, one of the things you keep bringing up is blockchain, and if people listening don't know what cryptocurrency is, they're not going to know what blockchain is. And I remember I was listening to Patrick Byrne, and one of the things he said is the value of cryptocurrency isn't the currency itself, it's the blockchain technology.
Correct.
Can you explain to people exactly what blockchain is in layman's terms so they really get an idea of how this is manageable and gives value to the currency?
Yeah, and it goes right back to what I was saying, is that with a puzzle, if you think of it like a puzzle, if you are trying to create this picture, or again, even think of it like a chain. Yeah, you've seen those chains where they're made of links. One chain is linked to the next link, and it makes it longer and stronger, basically, the further out it goes. That's what blockchain is. If you look at Satoshi Nakamoto's white paper, the term blockchain is never said in one phrase like blockchain. It says it's a chain of blocks, and that's basically what it is. Each transaction that you do on the network is put into a block, and once that block is put together, you have to give that to miners who then connect those blocks together, and that forms a chain. So blockchain is a term that's come up, but it was never said as the word blockchain. It's a chain of blocks, basically. And I don't know if that cleared up any more or any less. And like you said, the same thing with blockchain. If they want to understand cryptocurrency, they want to understand blockchain. Cryptocurrency is just that. It's cryptographic currency. Think of it this way. Andreas Antonopoulos say we, for the first time, have programmable money. So with my money, I now can actually program that money to do certain things based on certain times. So that's why this cryptocurrency is different than regular cash. It's even more than just digital cash. It's actually programmable money.
Yeah, and one of the things that we deal with fiat currency is centralized control. I mean, you've talked about decentralization a couple of times. The problem is when the federal government's printing all this money and they have control over how much money is being printed. Bitcoin itself, and I'm not this in depth familiar with all the currencies, all the cryptocurrencies, because there's a lot of them out there. But Bitcoin itself has a specific amount of currency that is going to be mined, and the miners cannot control how much of that currency is being mined. Can you explain to people why that's important? Because to me, it almost seems like it works like a natural resource. It almost works like gold. Like there's only a specific amount of it, therefore it won't lose its value once it levels out. And we can talk about the fluctuation and the cost if you would like to as well.
Right. Yeah, there's several characteristics to money, and I wish I had the full ability to go back and give you all the history of money, but money has several characteristics. One characteristic of money is a store of value. And that's what gold is. And that's why some people look at Bitcoin right now, because it really is, at this point in time, it acts more like a digital gold. It's a store of value. You can put your money into it and you're going to see, most likely for the most part, a increase in the value of that. If you go back to the very beginning when Bitcoin started, it was worth zero, or 0.0001 cents. Right now, all of a sudden, Bitcoin's worth 7,000. It was worth 20,000 at one point. So it works like gold. That's a store of value. The second piece of money is a medium of exchange, which means I can use it as money. I can actually buy something with it. And there are people in some countries who buy actual goods using Bitcoin. There are companies who are willing to accept it. As a matter of fact, the most recent case is Samsung. Samsung said now in Malta, in the Baltic states, they will now accept cryptocurrency as a form of payment. Store of value, medium of exchange, form of payment. The third is a unit of account. That means that you can actually delineate the value of something in cryptocurrency. You can say this is worth 1 Bitcoin, or worth 2 Bitcoin, or worth 1/100th of a Bitcoin, but that's a unit of account. Those are the three characteristics of money. Andreas Antonopoulos goes one step further and say there's one more characteristic of money that most people don't think about, and you mentioned it already. It's a system of control. This is what the central banks have right now over the entire globe, is that they control the money supply. The reason Bitcoin came into existence is because of the Fed and the Fed printing money and the hyperinflation that happens as a result of that activity. What happened in Greece is the reason why. Andreas Antonopoulos actually told his mom right before Greece had that big haircut that they told everybody, sorry, but you're going to lose 30% of your balance in the banks, and they have the right to do that. They own the money. They hold the money. They can do that. With Bitcoin, that won't happen because it's decentralized and it's censorship resistant. You can't shut it down, and you can't control it because it's controlled by computer code. Now, you asked the question about the amount. Why can't that change? At the very beginning, the brilliant minds that put this together hard-coded into the code, there will only be 21 million Bitcoin ever in existence. That's it. Now, in order to change that, Bitcoin is also written like the Constitution. It takes several parties to come to consensus in order to make a change. So you have developers, programmers. There's a set of people who develop, and actually right now I think there's over 700 people who contribute to keeping the Bitcoin code stable. You have node operators, people who can run a node. You could run a node at your house if you want to. You could run a fully validating node. Or a miner. That is someone who's actually putting all of those transactions into blocks and linking them together to keep them secure forever. You have developers, nodes, and miners. This system is built this way You cannot work around, and it's completely decentralized. There's people all around the globe that make this system work together. So not one country can control this, not one person, not one corporation, because it's completely decentralized.
Now, Bitcoin had a split, was it last year, where
yes.
now you have Bitcoin and Bitcoin Cash? What are the difference between the two?
So, and again, remember what I said. So with this, it takes consensus. We had what's called SegWit. And not to get way too deep into this, but there's two groups of people out there that was dealing with Bitcoin. One was considered small blockers, and the others were called big blockers. Small blockers wanted to stick to what is written by Satoshi, or what was assumed by Satoshi, is that you need to keep 1 megabit block size, which would get processed every 10 minutes. That's what they wanted to keep. There were other people that said, and with keeping it small, it makes this thing move really slow. It's a very slow. So you can't scale this up to Visa, MasterCard network type transaction speed because it's too slow, but it's highly secure. The big blocker said, no. We can change this. Even Satoshi said we can change it, and we think we should make it 8 megabit blocks. So what they did is they said, and you can do this with any blockchain, you can get a bunch of people together and say, hey, we want to fork off of the chain and create our own network so that we can do what we want to do on it. It's like religion, right? Somebody says something they don't believe, they create a new religion. So it's the same thing with blockchain. With Bitcoin, they split, and the big blockers went their way and they called it Bitcoin Cash, and they believe they're sticking with Satoshi's original vision, which is up for debate, and the small blockers who kept Bitcoin. Now, what determines if something's going to be a name determines the longest chain, and Bitcoin has the longest chain and has the most miners, has the most power, has the most history. Bitcoin network stays the same. The fork is named something different, and that's called Bitcoin Cash, and that team decided to go that direction. Can you use both of them as currency? Sure. If you want to use Bitcoin, you can use Bitcoin. If you want to use Bitcoin Cash, you can use Bitcoin Cash. Doesn't matter. But they're two separate networks now.
Okay, being separate networks, are they valued differently? Is Bitcoin worth one thing, and Bitcoin Cash worth something else? Yes,
that is correct. They're valued vastly different. Bitcoin right now is trading around $7,000 Bitcoin, and Bitcoin Cash, I believe, is a little less than $1,000.
Okay.
And a lot of that has to deal with the mining power, the hash rate. And again, it gets really technical when you start diving into those areas, but it's basically the way the system is built and the way it's run that determines the value of these networks.
Okay. Because what I've at least uncovered through talking to other anarcho-capitalists such as myself is that they're a little bit more drawn to the Bitcoin Cash due to the government looking at regulating the Bitcoin, and they tend to tell me, at least the way they describe it to me, is Bitcoin Cash works a little bit more like a currency, whereas Bitcoin is more of a stock almost, where it's more of an investment for the future.
Yeah, Bitcoin works more like digital gold, as we said before, and Bitcoin Cash's mission is to really make it used like currency. But here's the problem. There's no regulating Bitcoin, so we probably need to make that clear to everybody. You can't regulate Bitcoin. The only thing you can do, as Andreas Antonopoulos said, and this was not with regulation, but it was with banning, it says you can ban your country out of Bitcoin, but you can't ban Bitcoin out of your country. And the reason that is because the moment you say you're going to ban Bitcoin, Bitcoin can't be stopped. As long as you got an internet connection, you can access Bitcoin. They would have to shut down the internet in order to shut down Bitcoin. Now, regulation for on-ramps, you can regulate those. You can go to the exchanges and you can try and regulate those. But person-to-person transaction, you can never regulate that and you can never stop it. Now, with Bitcoin Cash, yes, it's trying to be used as cash. And rightly so, the people that are pushing the Bitcoin narrative, I don't have a problem with them. Listen, be Bitcoin Cash and be used as cash everywhere if you would like to be. You still have a problem, though, because the government controls taxes, and they say if you use cryptocurrency today and you spend it, you owe capital gains tax on that cryptocurrency here in the U.S. anyway. You own tax. Long-term, short-term capital gains tax will apply if you move that cryptocurrency. And that goes for both Bitcoin and Bitcoin Cash.
And another of the things that they brought up are the fees that are associated with Bitcoin as opposed to the fees that are associated with Bitcoin Cash. Can you give a little breakdown about how the fees are applicable and what they are?
Yes. So the miners, back to that mining, and I know it can be difficult to wrap your mind around all of this, but miners, the work that they do, they can attach fees to transactions as a means of compensation for the work that they're doing, because they're taking your processes, and I mean, you're taking transactions and they're processing them and they're moving them around. So they're like, hey, we're going to get paid as a result of doing that work. So when all of the nodes report that a transaction has happened, they put them inside of what's called the memory pool. And it's a pool of transactions, and they're waiting for the miners to pull those transactions out and put them onto the block so they can be processed. So what happens is the more fees you pay, the faster your transaction goes to the network. So if you want your transaction to go really fast, then you attach a fee to that, and boom, it's going to get processed. Versus you just say, I'm just going to let it take its time to get processed. It might be 10 days, maybe 10 hours, it might be a day, it might be 2 days, it might be 3 days. But I'm going to wait till the network processes this. When they've run out of all the transactions that have fees on them, they will begin to process the other transactions that do not have fees. So that's the way fees work. Now, what was happening back when this whole thing around what was called SegWit, segregated witness, where they took the signatures out of the transaction so it can process more, and again, it gets technical, but that's called the sidechain. What happened is they began to attack the Bitcoin network with a bunch of spam. This drove the fees very, very high, because if you want to get your transaction processed, you had to attach really high fees because there were so many transactions, and so that they would increase the fees. That has changed today. With SegWit and Lightning Network, the Bitcoin fees are almost nearly zero again. Yeah. So Bitcoin Cash people would like to say, oh, Bitcoin fees are high, that's why you should use Bitcoin Cash for transactions. That used to be true. That's not true anymore today. Actually, the fees have dropped down to nearly like a penny or something of that nature.
Well, does the Bitcoin Cash have a limit on the amount of Bitcoin Cash that will be created like Bitcoin does? Is it cut off at 21 million as well?
Yes, I believe from what I understand, Bitcoin Cash still adheres to the 21 million Bitcoin Cash limit. They did not change. Now, they could have changed that limit if they want to. If you look at Litecoin, that was created by Charlie Lee, when he forked, Litecoin is a fork of Bitcoin. So when he forked off the Bitcoin chain, he created Litecoin. But when he did that, he wrote in the code that there would be 84 million Litecoin. So it's 4 times as many Bitcoin.
Right. But
they didn't do that. They didn't do that with Bitcoin Cash.
Well, with it having a limit on the amount that's going to be printed out, even if Bitcoin Cash doesn't have a fee today and Bitcoin has a fee today, isn't it looking at when you get to that 21 million point, aren't you going to have to charge a fee so that the miners are still being, paid for the processes that they're going through? Because the mining process does not seem easy to me. I mean, I've heard of people having to putting rooms full of servers in their house so that they can mine properly.
Yes. So yes, that's part of the system. The way it's built is that once we reach that 21 million Bitcoin limit, then there will be no more Bitcoin given out by the system, and therefore miners will charge fees, and there'll be a fee, but again, the fees will not be that much. You want me to tell you why? Because the amount of transactions on the network will be massive. So you can still charge a penny, right? But you're processing millions upon millions upon millions of transactions. The fees that you charge, you're going to be fairly compensated for the work that you're doing, because the network has grown so robust that even a fraction of fees will give you a lot of money.
Now, I'm sure that some people are wondering about the cutoff, the 21 million that we're talking about, and how this works. Can you give a good summation about how the Bitcoin is released and how long it's going to be before they release the entire 21 million to the public market?
Yes. So Bitcoin, this is the way it works. When it first came out, every time you would process a block every 10 minutes, you were given 50 Bitcoin. And then in 4 years, that got halved. It's called the halving, halving, halving. So it halved to 25 Bitcoin every 10 minutes. And then we had 4 more years and it halved again. And now currently today it's at 12.5 Bitcoin every 10 minutes. Our next halving will be in the year of 2020 when it will go down to 6.25, if I'm correct. Yes, 12. Yeah, 12.5. Yeah, so half of that is 6.25 every 10 minutes. And it continues to do that every 4 years. And I think that it will do that until the year of 2140, I think they said, or 2040. I think it might be 2040.
Yeah. Yeah, I knew it was going to be quite a while. I couldn't remember the exact date.
It's quite a while. I've seen it written two ways, and I probably should know that. But it's either 2140 or 2040, because here's what happened in reality. When you get down to one, right, or one Bitcoin every 10 minutes. If you have that, you get to 50.50, and then 0.25, and then 12.5. It keeps going. I mean, this goes forever, and every 4 years that continues to happen. So this process goes on for a while.
Yeah. Now you mentioned Litecoin earlier. I've heard the name Litecoin. I didn't realize that it was a derivative of Bitcoin. But
yes,
when they increased the amount of coin that was going to be produced to 84 million. How did that affect the price of it? And is it a little bit easier for your average person to use on a day-to-day basis with it being, a lower costing product or investment?
Yeah, no, it doesn't. It doesn't make it any easier. Here's what's going to drive ultimate adoption and use of any of these cryptocurrencies will be user interface. And this is what we're waiting on, is that we have to make cryptocurrency almost a no-brainer for everyone to actually begin to use it, because right now it's still too difficult. The geeky people get it, right? Because there's all techie, geeky stuff. But the average person, they just need to know, hey, push a button, scan a code, you're done. And to get money onto a wallet and out of a wallet should be just that simple. It should be like email, right? Just put in an address, type of subject, put the body in, hit send, you're good to go. And that's what's going to take it. The value of each one of these networks doesn't really have much to do with its usability as a currency. The cost, whether it's Litecoin or Bitcoin or Stellar or Ripple or you name it, how the value behind it will not determine if someone decides to pay with it. As a matter of fact, like I said, again, in the Baltic states, they've picked Bitcoin, Ethereum, Litecoin, Dash, Stellar, and I think another one. Oh, no, not Stellar, Ripple, and another one to use. But no, I don't think price and how that's impacted will change if people decide to use. Mostly it's driven by it's sort of like cultish. It's like whatever project you like the most is the one that you'll probably like to try to use as currency.
Mm. One of the things I found really interesting about cryptocurrency, and I don't remember the name of it was a little short book I got on Audible. I think it was just Bitcoin Explained or something like that. And it was really short. But one of the things I found interesting was the way that the wallet works, and the way that the codes for your wallet work. Having a private code to access your money and be able to spend your money, and then having a public code that's out there in the public that you can just put out there and nobody can access your money but other people can send you money using that code. Can you explain how those codes work?
Yeah. So think of email. Email is the same way. So if I say, hey, Thomas, I want you to email me. My email is paul@cryptomarket360. You go, sure. And I can put that out there for everybody all over the web. Now, some people like to try to keep their email private, right? And sometimes like on LinkedIn, unless you know the person's email, you can't connect with them. But for the most part, hey, if you want to accept money, you got to put your address out there. So if I put my address out there, and a lot of people do, they put it on their websites. There's our address. You can donate to us. You can give us money. So that's the public address. The private key is like your password. So if I want to log into my Gmail account, I need my username, and which is my email address, which is that public address, and then I need my password, which only I should know. And if I do it right and I make it secure enough, no one's ever going to get it. But if I put password 123, well, everybody's going to get it, and they'll hack into my account, and then they'll read all my emails. The only problem is when you're dealing with money, they'll hack into your account and they'll get all your money. And guess what? Once they got it, they got it. It's not yours anymore. Mm-hmm. So that's the difference between the two.
Now, has this this system of multiple addresses, has it been compromised in any way? Is there any possibility of people hacking this information from you?
No. Because the private keys are generated, computer generated. You're not picking a private key. That's computer generated. So the way it works, and Andreas Antonopoulos did an actual podcast on this YouTube video, I believe, and I wish I could regurgitate exactly how, but the way that it's done, it would take, billions of years for you to break this. They believe that when quantum computing come around, they'll be able to break it. But I can tell you that there is a organization in Switzerland. They're already working as a university on making the Bitcoin code quantum computer resistant. So they're working on quantum computing cryptography to prevent from quantum computers from breaking the code. So you can't. I mean, it's almost nearly impossible to break a private key. And this has been going for almost 9 years, and we've never had someone break into someone's account. Now, what they have done and what most people have heard of, and they get it wrong, is that they've hacked an exchange. If you have your keys on an exchange and someone hacks an exchange, they have your private key. And as Andreas says, not your key, not your coins. So you don't have your private key, because if that private key is on a centralized exchange, it's just like when they hacked Home Depot. When they hacked Home Depot and got all the credit card information and everything, they got all your information. It was all sitting on their servers. Even your private key is sitting on Coinbase's servers. If Coinbase got hacked tomorrow, all of your crypto could be gone because they have your private key.
Okay. And when I've heard different stories about doing doing transactions from your phone. What would you suggest people do? Because I've heard of apps that are supposed to be coming out that it's going to make it easy, just like a one-touch app to where you can send $250 to somebody anywhere in the world, just straight to their phone. What is your advice when it comes to things like that?
For using crypto?
Yeah, whether or not you should do transactions from your phone, because I've heard different people say different things. I've heard some people say that it's extremely dangerous to use your phone in exchanging crypto, and then I've heard some people say no, there's no danger to it. It's just these people are paranoid and they don't know what they're talking about.
It depends on, the situations, and that could be numerous ones. I mean, right now, if me and you were in person and I pulled up my Coinbase wallet and I said, hey, I'm going to send you $5, and you pull up your Coinbase wallet and you scan my phone, there's nothing wrong with that transaction. Nothing's going to happen. It's not like there's going to be a man-in-the-middle attack and someone's going to intercept that and they're going to take the Bitcoin from me going to you and they're going to take it. That doesn't happen. No, that doesn't happen. Where people have issues is that there's software that's written when you're doing it on a computer, and a lot of this is done by copying and pasting because the addresses are so hard. There's no way you can type all that in. So if you try and type it in, you're going to fat finger it and you're going to send somebody some money that you didn't want to send them. So that's one problem. The second problem is that there are some people that have written malware that goes on your phone or on your computer, and when you copy and paste, what you pasted wasn't the address you copied, because they have code on your computer or your phone that will transmit that, transform that into an address they own, and when you go to send it, it gets sent. So you have to verify all the way around. If you're going to copy, when you paste, you need to look at those two addresses and make sure what you copied is what you pasted, and then you send it. And then at that point, there's no way for anybody to get in the middle of that. But that's the problem, is that it's just carelessness. Again, this is not a system for people that are not sharp and know what they're doing. If you are lazy or you don't pay attention to detail, I wouldn't even say if you're lazy. If you're just a person that don't pay attention to detail and you think, oh, I copied, I pasted, I'm good, I sent it. No, that's not going to work, because once you send it, it's gone.
Yeah. Yeah. Okay. Okay, because like I said, I've heard of some apps that are coming out, and I didn't know if it was something I should look at, as far as setting up a wallet and this, that, and the other. If I should
Yes.
look at doing it on my phone, or if I should just keep it on my computer at the house. So that was actually
Yeah, so I'll say this to that, and I'm glad you brought that up. So here's what I would tell all your listeners, and this is the message I'm trying to get out to everybody I possibly can. Everyone should own a wallet. It costs you $0 to own a wallet. So everybody, I don't care who you are, even if you don't plan to buy any crypto, you need to get a wallet. That's the first thing I want everybody to understand. Now, why? Because if the masses do come, right now we've got probably about 1% of the world even paying attention to this. If the other 99% wake up and they start these websites are going to go down. You just can't. We've experienced this. I've experienced this several times when all of a sudden FOMO hit, which is fear of missing out. Everyone starts to try to rush in. It's sort of like yelling fire in a crowded theater. If everyone tries to run out those little doors at the same time, you're not going to make it. So I'm telling everybody right now, while everything's calm, go get yourself a wallet. Coinbase has a way for you to get a wallet. Abra, Square, Gemini, Bittrex, Bitstamp, Bitfinex. I mean, there's so many different ways. Binance, you can get a wallet. Get a wallet. Now, a lot of people say, well, which one do I pick out of all those? I always tell people, listen, Coinbase has been the most reputable company in this space. They've never had a hack. They've never had any hiccups for the most part. I would go with Coinbase or go with Abra. Now, there's philosophical difference by the way Abra handles some of their stuff, and some people aren't happy with it, and so Abra's not. Robinhood is one that a lot of millennials already use for trading stocks. Use Robinhood. They have now begun to trade cryptocurrencies. So get a wallet. Now, Wences Caesars, he's the CEO of a company called Zappo. Here's a quote from him. He said, and this was from an article from CryptoSlate. It said that the advice from Wences Caesars to those wanting to be a millionaire is to take 1% of what you own, buy Bitcoin, then wait 5 to 10 years. That way, according to CEO of Bitcoin storage company Zappo, you either lose 1% of your net worth or you make millions. Now, there's a lot of billionaires out there. They've taken that advice. And as a matter of fact, there was a recent billionaire. He was on CNBC. He said, he admitted, I have now put 1% of my net worth into Bitcoin. That's the way you do it. So everybody get a wallet. And I would say 1% of your net worth, put it in Bitcoin. If you lose it, it's not that big of a deal. It's 1%.
Yeah, true. I know one of the things that's going on, you have social media coming up like Minds and Steemit that are actually paying people in cryptocurrency. I think Minds uses Ethereum, if I'm not mistaken. What do you think about the way that Minds and Steemit are using crypto to on their platform?
Yeah, I mean, with some of these platforms that quote unquote reward you with cryptocurrency for doing certain things, hey, if you are an influencer and you can get out there and you can get enough people following you and it's worth your time and effort and energy, sure. Most of the time I found that unless you really have made that a focus for you, you're not going to get that much. You'll get residual, which is fine, but you're not going to get a lot. It's not like it's going to make you rich just by doing that process. I tell everybody, listen, I know I might be old school on this, but just do it the old-fashioned way. Listen, if you work a job, you get paid, take a part of your paycheck and buy cryptocurrency and just keep doing it. I don't care what the price is. Just keep buying, keep buying. So Charlie Lee, who created Litecoin, this is what he said. He said, I believe everyone should work, and it is work. They should work to own one Bitcoin before they buy any other cryptocurrency, including Litecoin, which he's the founder of. He says before you even buy Litecoin, you should try to get one Bitcoin. And here's the reason why. There's 21 million Bitcoin. There are over 31 million millionaires in the world. You will not be able to have every millionaire have one Bitcoin. So if you get one Bitcoin, you are doing extremely well.
Yeah. The crazy thing about Bitcoin, and I know this has caused some people to panic. You don't seem like you're worried about it at all. Just from the conversations we've had, the fluctuation in the cost. Like you said earlier, it's been up to 20,000. Now it's at 7,000. I thought it was last week. It was at 6,000. It had a pretty big drop here in the last couple of weeks.
Yep.
I've heard different people say different things about where it's going this year. I think McAfee says that he thinks it's going to be over $100,000 Bitcoin this year. I've heard other people say 60,000. Yep. Are they fooling themselves, or is it because gold is bounced out right around what, $1,500 an ounce or something like that? Is it possible for cryptocurrency to keep a value that much higher than gold?
Yes, it is. Then it's back to scarcity again. So gold, we sort of know the supply, but we really don't, right? You can all of a sudden hit a mine tomorrow and there's a bunch more gold. And so gold supply has been increased and gold supply can continue to increase. Bitcoin, that's not true. As a matter of fact, we're going the opposite direction. So of the 21 million Bitcoin, Satoshi Nakamoto owns a significant amount of Bitcoin. I don't know what the number is, but it's a lot, right? Let's just say he owns a couple million. Okay, so that takes us down from 21 to 19. So we already know that there's been about 4 million Bitcoin lost already. Like, people can't remember their passwords. They threw away the server. They don't have the keys anymore. So if that's the case, that takes us down to about 15, right? So 15 million Bitcoin will be what's in existence forever. And that's it. So the basic supply and demand, if there's supply, and that's macroeconomics, right? Where there's low supply, the demand is, and the demand is high, the price is going to be high. So those numbers they're touting are real. Listen, we have the market cap right now for cryptocurrency as of this second right now is $286 billion market cap. And a lot of people go, wow, that's a big market cap. Not when you're looking at the 200 and some trillion dollars that is in the world. And if most of that money moves over to cryptocurrencies, the numbers you can't even tell what the number is. It's going to be so high. Right. The reality is that the numbers that they're quoting, those are real numbers. Listen, I remember back, and I've been around this since about 2011. I can remember when people were talking about $1,000 Bitcoin and everyone was losing their stuff. We were like, oh my God, this thing makes it to 1,000. Wow. And 1,000 came and it went. And it came back down to 200, and it went from 200 back up to 1,000. Then it went above 1,000, and people were losing it, going, "Oh my goodness!" There were people thinking that, man, if we hit 3,000, this is the greatest thing since sliced bread. And people back then predicted that we were going to go 10,000. Tim Draper, who's a billionaire, who won the auction from the government, and he bought 30,000 Bitcoin at $600 each. Back then, when it was like 1,000, he said this is going to go to 10,000. Everyone called him crazy. And that was well before before it even got into $3,000. And we hit 10,000 and we doubled that and went to almost 20,000. So this pullback we've had, it's very healthy. It's been a good pullback. Bitcoin normally retraces about 70%. We've done that. We're forming a base. I think the next road is going to be higher. And when it does go higher, you will not be able to catch it. We will fly straight through 20 to 30 to 40 to 50, 60, 100. And a lot of people won't believe it then. They'll be losing their stuff, and it'll pull back from 100 back to 20. And people will lose it, and they go, oh my God, it went from 100 to 20. Yeah, but that's okay, because it's going to go from 20 now to about 250,000 or 500,000 or 1 million.
Yeah. Well, and one thing that I think people don't realize is that the more people using one of these currencies, it increases the value of that currency, because it increases confidence in the currency, and it increases the amount, and it decreases the amount of it that's available, like you said, supply and demand. And so the more people that use it, the closer you get to that point that the price actually finds its level for the scarcity. So eventually it's going to top out somewhere. It's just the fact that nobody knows exactly where that is, and a lot of people are afraid to gamble with their money in that way. And
here's the thing: it's not gambling. Again, think of it. Would people say you're gambling with your money by buying gold? Most people don't. They say, oh, you're being smart. You're putting your money in a precious metal that's going to hold value because it's a store of value. If people can't see, it's been 9 years that Bitcoin has been around, and it's been a store of value. If you go back to 9 years ago, and like they say, if you would even put $100 in Bitcoin 9 years ago, you'd have like $4.6 million. People, pay attention. This is not gambling. This is not a Ponzi scheme. It's not a scam. I'll tell you, listen to this. This is how significant this is. And if this doesn't, again, wake the audience up and let them know, then I'm not sure what will. The Chartered Financial Analyst Institute, the CFA Institute, just rewrote their exam for 2019, and they added Bitcoin to that exam. Why would they do that? Because it's not going anywhere. This is going to be here forever. Cryptocurrency, we're going to be living in a tokenized society. Tim Draper said that in 5 years, he would think people would be laughed at if they used fiat currency to buy coffee or whatever, because we will be living in a tokenized society. You can't see it today, but I promise you in 5 or 10 years, we're going to look back and go, of course, when we had the internet, did anybody see us being able to talk on a podcast and record this or do live video or do Instagram? No, they didn't. That wasn't even in the picture. Sending email was an amazing thing. But here we are now, and everybody's like, oh, yeah, of course it's the internet. Of course you use Instagram. Of course. This is what's going to happen with blockchain technology. It's going to be, of course.
Now, one thing I think that they're overlooking, and you could correct me if I'm wrong. One thing that I think is being overlooked here in the entire scenario is if we have a power grid scenario, whether it's Russia or China or anybody decides to attack the power grid, and we lose our availability to get a hold of our cryptocurrency. What kind of steps are being taken to protect the value of the crypto? Is it going to be a physical form of it, or do you think it's always going to be just digital?
It's always going to be digital, and there's a company that's working on this. Their name is Blockstream, BLOCK Stream, STREAM. Have your listeners Google that, look it up, and you can either Google Blockstream satellite Bitcoin. But satellite, they're now being able to do Bitcoin transactions with using satellites. So let's just say someone wants to shut down the grid, shut it down. There are ways that we can still work with using Bitcoin on Blockstream. I talked to a gentleman this morning. I can't relay all the information, and I have a hard time comprehending all of it yet, but he's working on a way to be able to do transactions offline. You don't have to have any device connected to any internet anywhere, and you can still do Bitcoin transaction using what's called mesh networking. There will be solutions that will answer all these things. Like back in the day, I can remember this, and I don't want to tell my age, but back in the day, we used to use cash registers that were not connected to the internet. They were just cash registers. Click, 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 push a button. Click, 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 push a button. Back in those days, people were like, man, these computers are coming around. What happens if all the power goes out? How are we going to buy groceries? When was the last time you heard of a grocery store losing power so much so that no one could buy groceries? Maybe in a major calamity like when Hurricane Katrina hit or when the hurricanes hit Puerto Rico. But at that point, you don't even care about that. That's the last thing you're worried about. You're thinking of your life and everything else. So the reality is that I don't think we're ever going to get to a point to where we're going to see some catastrophic event happens and you can't use digital currency.
All right. Yeah. Fair enough.
Yeah. It's just way too extreme.
Yeah. No, I see what you're saying. I just know that there's, now, war has moved digital. It's moved everything, is going online now, and everybody's trying to attack somebody through, some digital way. And it's kind of crazy the way the world is going, but
it is.
Okay.
And we didn't talk about this aspect of it, and I know money dominates a lot of this talk right now, but there's a whole new world happening with blockchain technology that your companies like Walmart and all your 4 major auditing firms like Accenture and PwC and Deloitte, and I mean, there's so much being used for blockchain like identity. Here's I'll toss this out there, and this will hopefully let everybody see the power of this technology other than just currency. If we can get identity on the blockchain, that means every single individual on Earth has their identity on the blockchain. We will remove the potential for identity theft ever again. You can never steal somebody's identity because everyone's identified on the blockchain, and you can't fake identity on the blockchain. Now, if that's the case, we can now live in what's called a frictionless society. Think about this. All of a sudden, if I have my identity on the blockchain, everywhere I go, I can now interact with not only people, but buildings and things around me. If I go to Starbucks building will say, Paul McNeal's here. How does it know? Again, I'm carrying my phone. I'm carrying some kind of ID beacon on me, and it broadcasts, Paul McNeal is here. And, oh, by the way, Paul normally gets a tall black coffee, medium roast. When I walk in the door, and at this point, probably machines will already be working, will have a medium coffee sitting for me. I pick it up. The moment I pick it up, it just got paid for. Why? Because digital currency is in existence, and now all of a sudden, I can pay Starbucks and not even pull out a phone, pull out a wallet, put out any kind of money. It just happens frictionlessly. And the same thing goes for everything. Think about this. I was driving my car down a toll road, and I haven't thought about paying a toll. I pay tolls, but I don't think about the fact that I'm paying a toll when I drive through the toll booth. Why? Because we've made it frictionless. All of a sudden, my car just goes and it pays and it gets done. All of my bills are paid by credit card. It's all automated. I never think every month I got to pay my house note because it's automatically done. We don't think about paying. It's frictionless. When I go to walk into your house, if your doors opened automatically, if the lights came on automatically, if the television came on automatically to the program you wanted to watch at that given time. This is what blockchain gives us the ability to do. When you interact Internet of Things with blockchain technology and automated processes, you're going to see a new world open up to us that we've never imagined. But that's the power of blockchain technology because it's a secure platform, it's decentralized, and it has the ability to work that way. And if you add cryptocurrency to it, my fridge can order food for me, have it delivered by the Amazon robot, it brings it into my house, puts it in my fridge, and I'm done. And it sounds crazy today, but I promise you, this is the way the world's going to look, and people are going to be like, wow.
Yeah, well, you heard it here, folks. The robot revolution is going to be run by blockchain.
That's right. Get ready, people. Get ready.
Get the mark of the beast and just hold on tight.
It will be interesting. I mean, here's another big discussion point, and we won't get into this one, but UBI is real. Universal Basic Income. There are people working on this. There are in the state of California, in Stockton, California, the mayor is now launching a pilot program to test out universal basic income. Why? Because with automation coming, jobs are going to be lost. The low-level jobs will be lost. That's already a fact. I promise you it's going to happen. So people have to have money some kind of way. Now, again, I'm going to show you another powerful example of blockchain. This is how beautiful it can be. If you're on the blockchain and you could actually monetize, and this is what most people don't understand. We've given all of our valuable data to Facebook and to Google, right? Mm-hmm. Blockchain lets you pull that back and take control of that. And this is how. Let's just say I'm in New York and I'm on the blockchain and I'm now controlling my data. The fact that I showed up at the subway is valuable to the subway system because it needs to know how many people are riding, ridership. So if every user had their identity on blockchain, every user could get paid just for showing up to ride. The next thing I can do is I can say, yes, in my profile, I can say I'm willing to be shown ads from these companies. When I get to the subway station, all of a sudden an ad pops up on my phone. I read it or I watch the video. Upon completion of watching that video, the gates open and I go through. They just paid for my ride home on the subway because I get to monetize my interaction with those advertisers. Everything I do, if I go to the gym to work out, those statistics are and it could be without my name, but those statistics are fed to the pharmaceuticals so that they can know this is what happens when you work out, this is what happens when you're breathing, blah, blah, blah. This is a whole new world we haven't thought of before, but you will not get paid from W-2 type jobs. You'll get paid by the interactions you have with the network and with the systems around you. That's how you monetize your life.
Yeah. Well, I mean, and we deal with things like you said earlier, we deal with things on a daily basis we never thought of 20 years ago. We didn't think 20 years ago there was going to be such thing as a Facebook, or we didn't think there was going to be an Uber or a Lyft or, Airbnb or anything like that. Those things were, something you saw in, some sci-fi movie. So science fiction is becoming science fact, and that's part of who we are, and that's part of the evolution of humanity, and that's just the way it works. But I want to move to some news that you've been sharing on your Facebook page, and then I'm going to let you plug whatever you want to plug, and this,
Sure.
that, and the other, and we're going to move on. But you've been talking about August the 10th. Can you explain to people what's happening August the 10th?
Yes, so August the 10th is the day, and I read another article, so probably between the 10th and the 16th of August. But Bitcoin ETF, this has been a really big deal because 2 years ago, they tried to introduce what was called the Bitcoin Exchange Traded Funds. This is the way to allow people to get involved with cryptocurrencies without actually owning cryptocurrencies, or actually owning cryptocurrencies but doing so in a retirement account like your 401k or your IRAs. Right now, you don't have the ability to do that. Actually, there's one way you can do it, but it comes at a high premium, and it's called GBTC, put on by Grayscale Ventures. They actually own the GBTC ETF, and it's actually called an ETF, but they got a workaround the way they deployed it that it doesn't have to go through the SEC. Now, there are a few companies that have tried to submit applications, but they've all been denied from the SEC, the Securities and Exchange Commission. They have denied launching Bitcoin ETFs because they say the market's not ready for it. There's too much manipulation in it. We don't have a way to adequately understand what's going on with this market. And at the time, back in 2016, it wasn't that robust of a market. Things have changed drastically. So recently, SolidX and Van Eck decided to join forces to apply together for a Bitcoin-backed ETF. Now, we have Bitcoin futures right now, and if anybody's familiar with futures market, they know just like you do with gold, and there are a lot of other futures that are out there. Bitcoin is being traded in futures, but it's cash settled, which means that you can do your transactions, but it's all done in cash. You never have to really own the underlying asset. With this new ETF, they will be buying Bitcoin. Now, they've already said that they would be buying most of their Bitcoin OTC, which is over the counter, where it will not be seen by the exchanges and it won't impact the market that much. But some of them, they did say they would buy some Bitcoin on the actual exchange itself. So if that happens, we could see the price of Bitcoin really skyrocket throughout the rest of this year if it, in fact, gets approved. Now, with SolidX and VanEck applying for this, to make it even better, CBOE, the Chicago Board of Options and Exchange, they came out and said they will also apply along with SolidX and VanEck to make this happen because they really want to see this ETF come to market. The SEC said, okay, we see you guys are really serious about this. We're going to open this for public comment. So the SEC made it possible on their website that everybody could go publicly and give their thoughts on if they should approve this. A news article came out today that said that the overwhelming response was positive and that people want to see this Bitcoin-backed ETF come to market. August 10th, somewhere around that date, is the time where they will make a decision. Now, if they don't make a decision by August 10th, they have 90 days that they can extend that decision, which puts us into November 10th. So somewhere between August and November, we will have an answer if the SEC will approve an ETF. If they do, there is potential to think that we will see a lot of money come into the market. But the trick is this ETF is not going to be for you and me, unfortunately. It's for the accredited investors. You have to buy 25 Bitcoin when you purchase this ETF, which 25 Bitcoin at its current price. I'm going to try and do a little quick math here. That'll be, let's just go with 7,000 times 25. That's $175,000 per contract that you would have to put out. Most people don't have that kind of money. Right. So it'll only be for the big boys to play in right now. But if they do that and they come out, we could see the price of Bitcoin begin to skyrocket again. And we could end the year with a $40,000, $50,000 Bitcoin.
Well, with the SEC getting involved, and it's almost as if the government's admitting, you know, this wasn't our idea, but this looks like it's the way of the future. And
Yes.
if that's the case, do you think you are going to see influential economists and business people like Peter Schiff come around to Bitcoin before the end of the year, or do you think that's just going to be a long, grueling process dealing with the naysayers?
The naysayers out there, and you're right, it's most of the economists, Peter Schiff's, the Yale, professor economist type guys. But I'll tell you something interesting about Peter Schiff. He just had a debate against Eric Voorhees, and after that debate, they went out to dinner, and they actually gave Peter his first Bitcoin, or not his first whole Bitcoin. It was a Bitcoin transaction. I'm sure.
I was going to say, I'll debate anybody for one.
Yeah, maybe it was $100 they gave him, or maybe $10, but he bought a Bitcoin. But Peter is now starting to get involved. I would not be shocked to see Peter come out, if it's not this year, next year, saying, I was wrong. Jamie Dimon had to backtrack. He said it was a fraud. It was a fraud. Well, Jamie, the only fraud is you, because your company is the one that actually got hit by the SEC for being involved in fraud. It's not Bitcoin, and he's backtracked himself. And now JP Morgan, an article came out just 2 days ago that said JP Morgan is now looking to launch an ICO for tokens on the blockchain. This is the way this is going. I promise everybody, I've been watching this for too long. And one of the big events that made me really lock into this industry was when I saw Andreessen Horowitz. That's a VC firm out in California. They put $25 million into Coinbase to fund Coinbase. When I saw that transaction happen, I said, this is far more than what most people are admitting to, because they would not put $25 million just on a whim. Mm-hmm. So I think they're going to come around.
Okay. Well, I think we've covered quite a bit of information in an hour. I want to give you an opportunity to plug any websites or any way people can contact you, and let people know where they can get more information about cryptocurrencies and Bitcoin.
Sure. Yes. So I am the co-founder for Crypto Market 360. We try to make research easy by collecting news every day. We have a clean cut of the news, which means we have certain sources that we choose and pick from, and that's on both sides, both positive and negative. No matter what the news is, if it comes out negative, we curate it. If it's positive, we curate it. So it's not like we try to put a bias or a slant to it. But CryptoMarket360.com, you can subscribe to the CM360 brief. It's a daily brief, comes out at 9 a.m. Eastern Standard Time every day, including on Saturday. Saturday is a weekly recap. We summarize the entire week, but it's summarized so that the reader can quickly sort of scan this and get a full view of what's going on. It's no cost to subscribe to the brief. We do have sponsors, and we've been very excited about the sponsors we've had to sponsor the brief. And then we have live reports for someone who wants to dive in deep on any one of these digital assets or maybe an issue. They can look at that on our website to get that. We're on social media at Crypto Market 360. Mine is TestModS on Twitter. I'm always on Twitter. I share a lot of information on Twitter, so they can always reach me there.
All right, Paul. Well, I thank you very much. This was very informative. I'm sure I'm going to go back and listen to this one a couple of times just to make sure I can soak everything up.
Yeah, no, it's a lot. And I tell most people this, especially people that are new to this space, it can be challenging to understand all this, specifically if you're not technical. But I encourage you, even as much as you do not think you will understand it, begin to read it. And I highly encourage everybody, I don't care what your technical level, read the Bitcoin white paper. Just Google Bitcoin white paper and just read through it once, twice, 3 times. You'll start getting it. You'll start understanding. And the more you read, the more you understand, the more you interact with people, you'll get it. You'll be fine.
All right, Paul. Well, everybody, thanks for listening. This has been Stranger Encounters. That was Paul McNeal. I'm Tommy Salmons. Late.
sinking, tearing deep within my skin. Faded eyes can't see true evil within me. Broken mirror of my life cuts my